Good morning, traders. Orlando here. Let's have a look at gold and the US dollar Japanese yen for next week. I'm going to start with gold on the 4-hour chart. So this is quite interesting because of um, how this 4-hour candle closed. So let me just thicken out this chart for you guys. I'm going to look at structure, right? And just structure, this is what I trade. So after all-time highs, this is the low that created all-time highs, right? And then we have a clean break of this low. This 4-hour candle was very bearish, right? This 4-hour candle close, created this move towards the 3,900 level. So I look at candle closes below structure highs and lows. That's what I do. So um, after that, 3,900 level, big level, as you can see here. Buyers protecting this level over and over and over. So that's a big zone. Now, price retested this previous low that created that all-time high, and then we have a clean break of that structure, right? That immediate bullish structure that retested that low, that previous low was broken with this 4-hour candle. Same thing that we saw here, that 4-hour candle close that created that move. We're talking about a 270 pip move from this candle close. I'm not telling you that we're going to have a 270 pip down move, but this candle and that failure to move above at the close on Friday tells me that this is still very bearish. Now, I don't know how Monday is going to open, if we're going to have a big gap up or a big gap down. I don't know. I'm just telling you what I'm looking at, right? So, having said that, because we are in an immediate bearish structure, I'm looking for shorts. So let's go to the 15-minute chart and let's have a look at what we have here. Now, on the 50-minute chart, what I always look at the Sydney Open is the previous or the last New York session high and the last New York session low. So because I am looking at shorts because of how bearish this market is right now, I'm looking at price failing below above these highs. That means that what I wouldn't be shorting this market right now at all. So what I want to see is price move up, then failing to break above this high, and then closing back into the range to get a push down towards this low. Right? That would be my trade at the open, my optimal trade at the open. Now, that is a little bit of wishful thinking in the sense that we don't know how Monday is going to open, but that's what I see. Now, I want to talk about this 3,900 level because if the bearish scenario plays out, right, it's very possible that we are going to test this entire zone right here. This is a very, very strong area, right? Buyers are completely protecting this zone. So we have a ton, there is a ton of buy orders. Now, what I want to see here is a volume, right? If price comes down, hold on just a second. If the bearish scenario plays out, price comes down, and then we see a very big spike in sell volume right at the 3,900 level or so at this zone without a follow through and price failing. That means that sellers are trapped, right? Aggressive sellers are trapped by passive buyers that are eating all of those sell orders, and very likely we are going to bounce back up again. So volume is going to be very important at this zone when um, uh, thinking about taking a trade. Now, if we have a very volatile break of this level with a very strong spike in sell volume or red volume, then it is very likely that we are going to continue lower. And the cool thing about that is that if sellers take control of below the 3,900 level, right, we have a very, very big range towards the next target for 1,000 pips or so. This lows right here. So yeah, it's 800 pips or so. Now that's a very, very, I mean, sorry, that's on the higher time frames. And I'm just talking about the zone that I'm in, right? Now, that's the very scenario. That's the very scenario, right? If it plays out, we could see that possible reaction on the 3,900 level in gold. Now, what about the bullish scenario in gold? I really don't see, to be completely honest with you, a bullish scenario other than the one that I just told you, when where price dips towards again the 3,900 level, which is a big magnet, and we see a very strong spikes in sell volume, price failing from 3,900 level, trapping these aggressive sellers by passive buyers, and price going back up. So structure wise, at the open, looking for price failing above the last high on New York, right here. And on the bullish side, only the 3,900 on a very specific scenario where sellers are aggressive sellers are being trapped. Now, US dollar, Japanese yen, let's have a look at this. Now, it has been quite choppy on the US dollar Japanese yen. So if we go to the weekly chart on the US dollar Japanese yen, yes, we can see that we are trending higher. Daily, we are trending higher. But if you look at the range on the US dollar Japanese yen, it's not that good. We're talking about a 200 pip range on the past I don't know, 10 trading days or so. But that doesn't mean that there's not day trading opportunities, just as the team. Now, let's have a look at some levels and what we have done here. Now, this was a very, very nice price failure on New York. I didn't take this trade, but let's have a look at what happened here. Now, we have this previous low on the hourly chart. Now, we have this previous low. And again, we have a very strong selling in the US dollar Japanese yen. So what's going to happen? No, this hourly candle closed extremely bearish, right? So what happened here is that we saw a spike in selling volume and then price failing from this low these aggressive sellers, market sellers, were trapped and were eaten by passive buyers, and price just continued higher. Now, I'm showing you this example because this is what I would want to see at the 3,900 level in gold for a bullish scenario. And this is the only bullish scenario that I would play on gold. Now, US dollar, Japanese yen, let's continue. So on the hourly chart, it's going to be quite rough. We have these highs. Immediately speaking, we are in a bullish structure, but to be utterly honest with you, I am not seeing anything that I would want to trade in this market. Even if price fails from the 154.77.5, 154.78, I wouldn't want to be short because of this V-shaped recovery. This is very strong. This is very strong. The only scenario that I would want to see would be a bullish scenario. So let's go to the 5-minute chart and even to the 1-minute chart just to look at the lows that we have, right? The structure in this market. Now, If you look at the structure in this market on the 1 minute chart, I know that most of you do not trade the 1 minute chart, but I do. So we have price failures from these lows, right? So this zone is out, right? Because buyers to control here. Now, we have a couple of zones that I would want to see price failing. So the first one would be this low right here. So we're just 70 pips, 17 pips away. But let's go to the 5 minute chart just to have a clearer or cleaner look at this chart, right? So the zone that I would be looking for price failing from would be this upward, this zone right here. Now, because of this V-shaped recovery that we saw at the end of Friday's New York session, I'm only looking for longs at the open. Now, this could change if sellers take control and completely obliterate these zones, right? That's why I don't trade aggressively. I wait for confirmation on price failing from those zones. But if you look at the structure in this market, the bullish side of the market is super, super clean, whilst the bearish side, even, I mean, you could argue that the bearish side of the market of this trend is not strong at all because we are looking at the end of Friday's New York session. Yes, you can argue that. But still, if you look at structure, this looks like a pullback for further upside. So what I would want to see here is price trapping buyers here, early buyers again and again and again, like they did here, early buyers trap, stopped out, stopped out, stopped out, and again. And price coming back to the zone, failing from the zone to continue higher. That would be my only trade on the US dollar Japanese yen. That's what I'm looking for next week. Gold is hot. US dollar Japanese yen, not so much. But again, we find opportunities every single day. Heads up to that 3,900 level in gold. And have a great trading week, team.